With the S&P 500 down more than 18% since January, investors' concerns are growing, particularly in light of the Federal Reserve's recent hike in interest rates. This might be one more factor contributing to Michael Burry's increased pessimism about the stock market. Welcome back to Everything Tesla Stock, everyone. It is expected that Tesla stock would occasionally see price declines because it is susceptible to stock market volatility. Big shot investor Michael Burry, however, believes that equities will do more than merely decline, and that a stock market crash may occur in the upcoming months due to the current battle with inflation. The hedge fund manager predicts that supply chain disruptions and geopolitical tensions will cause higher than normal inflation in the coming months. The worst was yet to come, he said, even though many businesses will be doing their hardest to increase profit margins. What is the purpose of Michael Burry's remarks, and what should investors in Tesla anticipate in the upcoming months? To find out, keep watching. However, in order to be informed about all that Tesla is doing, don't forget to like, subscribe, and set on notifications if you enjoy this kind of information. Michael Burry, founder of Cheyenne Asset Management and a well-known stock analyst, said earlier this year that he believes inflation will persist for a very long time. He pointed out that a number of experts' year-end projections are overly optimistic, given that businesses' lower profits may eventually cause stock prices and projections to decline. He alerted investors to the possibility of a historic stock market meltdown in 2021 and forecasted a potential collapse. He had advised investors against being influenced by the fear of losing out since it can turn out badly. Adding to his litany of accurate forecasts, the fund manager recently tweeted that he thought the much-feared collapse was finally underway. The stock expert believes that rising prices are the result of reforming the global supply chain, and that equities may only be halfway down. He thinks that inflation hasn't peaked yet, and given that the inflation benchmark increased by 8.6% through May, the quickest growth rate in 40 years, this may be the case. Additionally, the Federal Reserve raised interest rates by 75 basis points in response to the growing inflation, which was the largest rise in a single move since 1996. It raised the federal funds rate to a range of 3 to 3.25% in September after doing the same thing for the sixth consecutive time. Jerome H. Powell, the chair of the Federal Reserve, claims that inflation is steadily rising to an intolerable level and could become entrenched if appropriate action is not taken. In order to reduce price growth, the Fed intends to cut expenditures and let supply and demand balance. Michael Burry claims that a number of experts concur that inflation is unlikely to stop anytime soon. Mohammed El-Arian, the former chief executive officer of PABCO and chair of Gramercy Funds Management, recently expressed his belief that the United States may soon experience stagflation, a difficult economic situation in which inflation stays high while economic growth falters. The last time it happened was in the 1970s. So is a future market meltdown coming for Tesla? Not really, though. In the year's second quarter, Tesla had adjusted earnings per share of $2.27 on $16.93 billion in revenue. The carmaker's margins decreased to 27.9% from 28.4% a year ago and 32.9% in the previous quarter. Due to the spike in production costs during these months, inflation was a major factor in the decline. It was also linked to increased rivalry for electric vehicle parts. Following a California fire-related incident involving one of Tesla's battery packs, Burry has recently become increasingly pessimistic about the automaker. PG&E put the Megapack battery to work in April. It has the capacity to store energy for usage at a later time or during blackouts. Burry provided information on this in a CNBC piece. The California Highway Patrol shut down a portion of a nearby highway for several hours afterward in order to contain the fire. In response to the incident, Burry tweeted that while he is not currently betting against Tesla, he believes there is a strong argument to bet against the automaker. "You can bet that I have plenty of it if I'm tweeting this," he wrote on Twitter. "However, I ought to be. A Tesla Megapack battery caught fire at a California PG&E substation." The stock analyst is renowned for making bold predictions about Tesla shares. After foreseeing and profiting from the mortgage issue that precipitated the 2008 financial crisis, he became even more well-known, and he continues to be a major short seller of equities. In the stock market, a large number of other investors also short equities. Put more simply, this refers to the situation in which one investor borrows stock, sells it, and then purchases it again to give the lender back their investment. Michael Burry and other short sellers bet that the stock they are shorting will decline in value. If this happens after they sell, they then repurchase the shares at a discount and make money, though it's a sophisticated tactic only employed by seasoned traders and investors. This is one way specialists profit from the stock market. Let's return to Tesla now. With the expectation that the stock price will decline, investors short Tesla stock. Despite the fact that shorting Tesla stock could be costly given the automaker's consistent outperformance of market expectations, many stock analysts continue to gamble against the firm. Prior to this, Tesla was considered the most shorted company, with short bets against the EV manufacturer surpassing $1 billion. But Apple has overtaken it, taking the infamous crown, as the short position on Apple stock has surpassed that of Tesla. Since April 2020, or about 2.5 years, Tesla stock has occupied the top rank in the league tables for short interest, with 864 days passing. Tesla's short interest of $17.44 billion, 57.30 million shares shorted, and 2.19% short interest percentage of float rank lower than Apple's, despite the latter's rising stock interest and short interest to $18.44 billion with 112.86 million shares shorted and 0.70% short interest percentage of float. Elon Musk issued a warning about betting against Tesla in the stock market, even if the company is no longer the most shorted stock. In a tweet from 2018, the CEO of Tesla predicted that anyone who gambled against the automaker would suffer the greatest short burn of the century, and that's exactly what happened in 2020. In 2012, he issued a similar warning, forecasting a tsunami of pain for short sellers. The stock price rose 461% in the year that followed. Apart from Michael Burry, a few other prominent short sellers have also targeted Tesla. Traders like David Einhorn and Jim Chanos have wagered against Tesla shares in the past. Nevertheless, the experts who have shorted Tesla stock have all suffered catastrophic losses as a result of their actions. Three Partners, a research organization, claims that investors who are retailing against Tesla are going to suffer from short squeeze hell. Short sellers of Tesla shares lost around $1 billion in July as a result of the stock's increase following the company's second quarter earnings report. Musk predicted that Tesla might have a record-breaking second half of the year after the company's facilities in Shanghai and Fremont produced records in June. His confidence seems to have boosted the stock price. Furthermore, the short seller covering raised the price of Tesla's stock even more. This occurs when traders who are shorting Tesla or the stock as a whole buy shares on the open market to cover their short bets. Michael Burry has expressed pessimism about Tesla stock before. The hedge fund manager disclosed a more than $500 million short position against Tesla in a regulatory report last year. As per the document, Burry possessed 8,001 put contracts with an expiry date, strike price, and unknown value as of March 31st. By the conclusion of the first quarter, he had 800,100 shares of Tesla that were worth $534 million, thanks to his long puts. During the third quarter of 2021, the founder of Cheyenne Asset Management also held a short position in Tesla, consisting of put options equivalent to 1 million shares. Additionally, he liquidated all of his holdings, holding only one stock in his portfolio. Early in the new year, the short seller tweeted that the size of his previous large short had increased. He said in December that he was shorting Tesla and urged Elon Musk to take advantage of the company's rising stock price. According to Burry, the losses in the markets are not yet over, and he thinks Tesla will have a similar demise. The Fed's ongoing raising of interest rates may have added credence to his belief. Given that Michael Burry has a track record of accurate forecasts, investors should pay attention to his views on the long-term impacts of inflation, which he has expressed on a regular basis. Additionally, investors who hope to secure their investments should concentrate on companies that have solid cash flows and competitive advantages because the stock market is currently witnessing greater volatility. However, how do you feel about his prophecy? Do you believe that